Hi, I'm Jack Mohr, Research Director for Action Alerts Plus. I'm here with Portfolio Manager Jim Cramer. We're talking about arguably our favorite company in the portfolio, Allergan. You're very close to the CEO, Brenton Saunders, and they had a transformative deal that they were approached by Teva for a $41 billion purchase of their generics business. We love it.
Yeah, I mean, Brent is a very smart businessman and recognized that with the coming consolidation and all the HMOs that we talk about constantly, they will then become much tougher on the generic industry, not the proprietary drug, because there's not much you can do. There's no other offset, but the generics have historically had margin problems. They don't right now. He sells it for 17 times EBITDA to Teva, gets to even get a piece of Teva just in case it goes up, which it did, and then gets to cure his balance sheet. There were a lot of people who felt that he was done buying things, and this is a buy story. Now he has $40 billion in debt. You know, he has no debt. The Journal said that he has a huge debt problem. He has none. So this was just a huge win for Brenton Saunders, which is why the stock, I think, when you see these $400 price targets, that's very realistic. And when people were watching this video, take Action Alerts to buy Allergan.
Yeah, and that's the thing. We raised our price target to 400, and how we get there is now we're looking at it. So they're getting all this cash for a deal, arguably a very expensive deal for Teva, but it's an incredible deal for Allergan. And now they're a pure pharma player. They don't have any patent risk, any of that. And so they have they've been historically trading at a 20% discount to the other major pharma players. But even in spite of they have greater growth, better pipeline, better products, and everything. They corner the market. They own the markets that they inhibit. And so now that valuation gap has to close, and it's going to 400.
Like, you know, Brent has always been saying, listen, if you want buybacks and dividends, there's plenty of guys. You can go buy Pfizer and Merck. If you want growth, you should go to Allergan. He's absolutely right. Don't forget they have that favorable tax situation. For money overseas, they pay a lot of taxes in domestic. And I think that what I like best about Brent is he really understands what a shareholder wants. There were articles when he sold this business to Teva, is it really a good thing for Allergan? I mean, he knew it was a good thing because he knew that that business was about to get cut to ribbons, and he's very, very smart. He'll do another deal. Will he buy Amgen? It makes a lot of sense. You could buy Amgen and better run the company. They've got some good drugs. Biogen, if it keeps going down, I mean, you might even look at that, but he can do whatever he wants. He's kind of in a Gilead-like position. He's a very, very smart man. Everyone knows he's top of his game. And we rank stocks and we talk about stocks. And a lot of people were after me saying, Jim, why did you break your discipline of paying up for stock? You always say don't pay up. There are times when you have to take the ultimate discipline and say, I'm going to violate what I want to do because the story's that great. Allergan is that story.
Yep, not stopping anytime soon. Thanks, Jim.